Good afternoon, everyone, and welcome to our YouTube live stream. Glad that you're here. My name is Glenn Tompkins, and I work for VectorVest, and we're glad to be doing this live stream by way of YouTube for you guys today. So if you're here, you're able to chat. I love the interaction. Please, by all means, chat in. Let me know who you are and where you're from. Glad again that you're here. The whole purpose of this is we're starting a little mini series on the YouTube channel called The 7 Secrets to Making Money in the Market. It's going to be a nice little way to learn how to effectively use the market. I got Jay Kana, 285. Hi, Glenn. Gary from Ottawa. Thank you that you're here. Daniel, how are you? Glad that you're here as well. I'm a big fan of the chat. By all means, feel free to chat in. I will be more than happy to answer any questions. And actually, today's presentation is going to require some interaction with you guys because I'm going to give you an opportunity within this mini series to get some stocks that you're currently investing in or stocks that you're currently interested in. We're going to analyze them. I'm going to show you how quickly you can analyze them, and I'm going to tie them into the 7 secrets of being able to make money in the market. So this is going to be a 3-session part, all 7 secrets, 2 today, 2 on the next session, and 3 on the last session. So if you like what you see today, by all means, come back. Also, the chat is important. You also have a subscribe button by way of YouTube. Utilize it. All right, utilize it. Subscribe for a trial. Great opportunity for you to test out the software that we're going to talk about. And also tap on the bell so that you be alerted to all of the upcoming streams that we'll have. All right, and that's what we want to do. First off, let me talk a little bit more about myself. Not that I'm vain or anything, but I've been with VectorVest now for 14 years. I love this software. I love being able to talk to you guys by any means necessary, whether it's on the phone, whether it's on a webcast, whether it's on a live stream. I love the opportunity to share with people the power of the VectorVest software. You get an opportunity to look in and learning what to do as far as how to work the software. So tap the bell so you'll be alerted as to when we're going to be coming on. A little bit more about the VectorVest software that I'll be representing today up in that corner right there. VectorVest software, stock advisory. What we're talking about here is a tool to help you to make better decisions in the market. That's the tool that I'm going to be using for the 7 secrets. That's the tool that I'm going to be showing you to make better decisions. Now, that tool is a tool to help you analyze any of the stocks that we have, manage stocks that you have, give you great information on the stocks that you have or stocks that you're interested in. That's what it's there for. We are not a broker, so you can't make any trades through us at all. But we're going to help you analyze any position. We'll help you analyze an industry or a sector as well. This company has been around for 30 years or more, and we're not a get-rich overnight kind of scenario. There's nothing here that I'm going to tell you that is the holy grail to investing. That's not what we do. But if you're looking for an opportunity to consistently make money in the market, the VectorVest tool is what we use, what I'm going to show you, and how to effectively use the power within that software to make money. So again, very happy to be utilizing the YouTube live channel. We've posted a lot of videos in this channel over time. But just to let you know, now we're moving a little further into that channel by doing live presentations, and you're going to be part of that. So again, use the chat, subscribe to the software if you like it, and don't forget to tap the bell. So let's get into what the 7 secrets are. I'm going to give you, where's my mouse? There we go. I'm going to give you a list of what the 7 secrets are. And the first secret, as you can see, says, keep it simple. All right. The second one is read graphs, heed the color guard, exploit the home page, learn to trade options, staying informed, and being an optimist. Those are the 7 secrets, and I'm going to break them down for you again into 3 different sessions covering the first 2 today. So again, if you don't, if you really want to stay on top of what's going on here, make sure you sign up or attend all of those. Thank you, Daniel. Daniel's in the background. He's the executive producer. I want you all know that. And Joey is my producer. Say hi, Joey.
Hi.
There he is. He's the guy that helps me to look good on the screen and takes care of all of the optics in the background for me and keeps me on track. So thank you for being here, Joey, and my executive producers in the background. He's the super guy. He can do what he wants. I want a fruit basket, though. Okay, as long as he understands that I want that. So with this, the 7 secrets, let me see if I can do this right. There we go. I'm going to start off with the first one. Dang it. I'm going the wrong way. There we go. Keep it simple. All right. Got to get used to that. We're going to start with keep it simple. Keep it simple sounds just like its name says. When you start with anything, the simpler you keep it, the easier it becomes. The easier it becomes, the more you'll use it. The more you use it, the more confidence it will bring to you. So when we start off with looking at this software, keeping it simple is going to be very important to making it all happen. Now, how did we all get started? From these 7 secrets, let's talk about how VectorVest got started. Our founder is Dr. Bart DeLito, all right? He's the maker of this software, and it was a while ago, he had a lot of frustration about trying to invest in the market. Bought at the very market top, sold out at the top, bought at the bottom, somewhere along those lines. He didn't do what he was supposed to do. All right, because he didn't get the information that was needed for him to do the right things. He didn't understand, he didn't get any information of knowing the answers of when to buy a stock or understanding what a stock is worth and when to buy, sell, and hold it. When to buy, sell, or hold it, what the stock is worth, and if it's safe. So what happened was he got snowed in a long time ago, and he picked up a magazine and he was trying to get those answers, and those answers weren't given to him. And he said, man, that's not what I need, and let me put together what I need. And he's a doctor in a mechanical engineering doctor, and he came up with algorithms to be able to answer the questions of knowing what a stock is worth, if it's safe, and if it's going up in price or not. Don't need that one yet. All right, so when doing that, and he put these algorithms together, and in 1988, he started mailing out a booklet on a weekly basis that gave the people the answer of knowing what a stock is worth, if it was safe, and if it was the right time to buy, hold, or sell. And that was started back in 1988, and it was a little blue book that he sent out every week. The beautiful thing about that is he could take that book with you wherever you went and have all of the answers that you needed with you at any given time. So he tracked those stocks with their value, how safe they were, and if it was okay to buy, sell, or hold. Now, fast forwarding to today, we track over 23,000 stocks globally. We track 7 different markets to include the U.S., Canada, Australia, UK, EU, what am I missing? Hong Kong, and Singapore. 7 markets. So we track 7 markets globally, and through those 7 markets, we track over 23,000 stocks. So now we do this all digitally, and every stock you can find out what it's worth, how safe it is, and if it's the right time to buy, hold, or sell. So we've come a long way over time to get you to the point of where we are. In this software, this analysis can be used on any stock in any of the markets that we track to analyze, and I'm going to show you how to analyze a stock in 30 seconds. Now, as we talk about keeping it simple, you can get bombarded by a lot of data. But what VectorVest does is we take that data and we turn it into useful information. And the information is what you're going to need to make the right decisions. There's a difference between making a purchase on a stock, it goes up 30, 40%, you look like a genius. But the real trick to it is not only just buying a home run stock, but being able to buy stocks that consistently do what you want them to do, and that's go up. Now, am I going to tell you that every trade is a great trade? No. But I'm going to also show you how to mitigate trades, mitigate losses in this Keep It Simple version as well. Keeping it simple is going to be key to understanding what to do and when to do it. So now, the whole idea, go back to that graph for me, in keeping it simple, what do we want to do? We want to look at stocks. We want to buy safe. Nope, go back one. We want to, Oh, can I do that? I want to go back. Yep. This is what we want to do. We want to buy safe, undervalued stocks rising in price. So write that down, especially my new people out there. What VectorVest wants you to do is we want you to buy safe, undervalued stocks rising in price, but I want you to add one other thing. In a rising market. All right, buy safe, undervalued stocks rising in price in a rising market. Now, many of you, if you look at Wall Street is going to tell you to buy stocks that are falling, and that's the worst thing you can do. You'll see a lot of times, hey, you got to buy this stock. If you liked it at 20 bucks, it's now at 15. You want to buy more. Oh, you liked it at 15, you're going to really like it at 10. That's the worst thing to do. You want to buy stocks that are rising. You want to buy stocks that are rising in a rising market. The worst thing you can do is try to catch a falling knife. So if the stock is going down and you think that it's a good stock, wait for a better opportunity to buy the stock. That is all about keeping it simple. All right, so now what we're going to start to do is we're going to start to get into the VectorVest system. Now the VectorVest system, we can go up. Can I go up one slide? Yeah. Oh, there it is. The VectorVest system uses some of our core proprietary indicators. Each one of these indicators that you see right here are our core proprietary indicators cast on a scale between 0 and 2. We make it easy. If the indicator is above the value of 1, it's favorable. If it's below the value of 1, it's unfavorable. So just looking at the indicator right away will give you a feel of whether the indicator is good or bad. We'll talk about relative value. Relative value is a long-term indicator of value. Relative value looks at the long-term price appreciation potential of the stock. Listen to some of those words that I said. Long-term price appreciation potential. Over the next 1 to 3 years, should this stock, we can compare it to an alternative investment. What is that alternative investment? It's a AAA corporate bond. When you buy a bond, you buy it for the time that you bought it for. It matures. After it matures, you get all of your money back with a small interest. It's a relatively safe investment, but it doesn't pay a lot. But I know that it's a safe investment. What we do is look at a stock's relative value. If it's above 1, it's favorable. The more above 1 it is, the higher the probability that that stock will outperform that AAA corporate bond. So that puts in my mind long term, that's a stock that I want to hold. All right? Next indicator is relative safety. That's the missing link. Because the biggest thing that moves a stock's price is earnings. There's 3 things that move markets globally. And in case you didn't know that, write these down. There's 3 things that move a market globally. Earnings, interest, and inflation. Now, when you hear about what's going on in China, the back and forth between China and the trade wars, until that affects any one of those 3 things, it is just news. All right? When you talk about the government being shut down, and one thing I'm not about in this room, and I will never talk about politics, but when you talk about the government being shut down, until it affects any one of those 3 things, it is still news. The markets globally move on things like earnings, interest, and inflation. Hi, it's Montgomery from South Africa. Hello, Montgomery. Daniel's laughing. I don't know what I laughed about, what I said.
Oh, your fruit basket?
My fruit basket? Yes, I still want my fruit basket, executive producer. All right, so keep in mind, anything else you hear on the news is a news. Now, you'll notice that back in October where the market topped, we'll talk a little bit about that, we went into a nice volatile market, back and forth, because of all of the news-driven information. But notice that overall, we never stopped saying that we were still overall in a bull market. Even with the bear run, we were still in a bull market because none of the things, especially earnings were still favorable. Companies were still meeting or exceeding their earnings expectations. All right, so keeping that in mind, there are only 3 things that move the market. Relative safety is that missing link because we look at the consistency and predictability of a company's financial performance. When relative safety is above 1, this company is going to be more apt to meet or exceed earnings expectations. If they beat earnings, most likely the stock's price is going to go up. All right. RT, relative timing, is the most important indicator. Let's go back to the mantra. The mantra is to buy safe, undervalued stocks rising in price. RT is going to tell me if the stock is rising in price. RT above the value of 1, the stock is in an uptrend. RT below the value of 1, the stock is in a downtrend. So RT is that most important indicator because we need to know what's going on with that stock. We want you to be in rising stocks. Value, safety, and timing vector, VST. That is our master indicator, which takes into effect RV, RS, and RT. Stocks that have an VST above 1 are favorable, below 1 are unfavorable. And when we talk about getting into building a watch list, that is how we sort all of the stocks in our database across all of our countries. No matter what country you're in, when you pull up a stock viewer, it's always sorted by that master indicator, VST. All right, that's what it's all about. So remember, all of this is keeping it simple. Remember, still, buy safe, undervalued stocks, rising in price in a rising market. Now, this is where I need some help from you. I'm going to show you how to get into the program. And let's go see what I want. That is the viewers tab. What do I want, Glenn? Oh, Joey, I'm going to use my words. This is what I want. I want that one so I can show you how to build a watch list. Did I do it right, Joey?
Go ahead.
All right. So that's what I want. Let me tap this, make sure it's right. You'll notice that I've already got some stocks from the stock viewer. I'm going to come back to the stock viewer in a second. I'm going to go create a new watch list right now on the fly, but I need your help. I need some stocks that either you currently own or stocks that you're interested in, and Joey is going to help me build this watch list. I'm going to call this build a new watch list under my watch list. Click on new, and I'm going to build a new one called 7 Secrets YouTube. And this is where we're going to build a watch list on the fly, stored under my watch list. So folks, I need stocks from you to put into this watch list, and I'm going to show you how quickly we can build this watch list. Now, if you guys are afraid to talk, man, don't be. This is what I need. I need some help from you. All right, say something. Let me know. Chat with Glenn. That's right. Come on. If not, I'm going to start putting my own stocks in here, and I'm going to build my own watch list, but I need some help from you. Let's see what comes up. One of the best stocks that I like forever is going to be Apple, so I'm going to type in the symbol, AAPL. All right? I'm going to put a comma, and I'm going to put another stock. Still not getting any feedback from you guys. I'm still looking. All right? This is an opportunity for you guys to get a better feel of any stocks. Free analysis. I'm giving you free analysis on any stock. I'm going to say, what if you don't know the symbol for Walmart? What if you don't know? There we go. Daniel gave me Apple, which I already have up there. What if you, sorry, Canadian markets only. I got you, Jay Connor. I got you. What if you don't know the symbol for a stock? So I'm going to show you how to do that. Let's say you want to put in Walmart. You type in the company, W-A-L-M-A-R-T. You notice that as you type that, the system is smart enough to show you what the symbol is for that stock. Simply click on it. It'll add that stock to the watch list.
That box doesn't show up for them.
Say again?
That box doesn't show up for them. But
okay. Well, that's fine. Let's keep on going. What other stocks? Ooh. Am I slow? Ooh, I'm delayed.
Yeah, it's a delay.
Okay, that's fine. Meat and glue. There you go. Thank you for that, Justin. I appreciate that. Meat, M-E-E-T, comma, G-L-U-U. Any other stocks? Because if not, I'm going to keep adding my own. How about I add Ford? So I type in F for Ford. I hit comma, Ford, comma. What else do I want? How about ETFs? Give me an ETF, Daniel. You want an ETF? Let's track an ETF. Give me an ETF that you want. What other stock do I want to put in? I want to put in JP Morgan, JPM. I also want to put in Goldman Sachs, GS. Notice that all I'm doing is separating all of these symbols by way of a comma. I'll add an ETF, Daniel. How about, there you go, Disney. I like that. DIS, Micron, MU. We track over 8,000 stocks in the United States. I know the ticker symbol for 7,963. So whatever symbol you put up there, I'll know it. How about that? Yeah. Ask I can't say that name. Ask said MU. He likes that. Gold, that's another one. How about GE? I'm going to sing again. GE, we bring good things to living. We bring good things to life. Remember that commercial? Yes, and I always tell people I show my age. WWE, why not? WWE, World Wrestling, right there. Let's try gold, GLD. Thank you for that, TP. SQQQ, we can do that. SQQQ. So, if you don't have any other stocks, I'm going to leave that alone. But if you get other stocks that you want to look at, we'll take a look at them as we go along. All right? So simply, now that I have all of those stocks in that list, I simply hit the enter, and now it builds my watch list. What did you do, Joey?
I was on
Oh, now I get to hit enter. Boom. Now my watch list is going to be created, and there it is. So now, all of the stocks that you gave me, let me show you the power of what I just did.
We got 2 more coming.
All right. All of the stocks that you gave me, notice that they didn't load the way that you gave them to me. They were automatically sorted by our master indicator, VST. So the stock that's got the best combination of value, safety, and timing is at the top of the list, sorted all the way down. How cool is that? So it just didn't take them and just load them in. As I typed them in, it automatically sorted them so that the stocks with the best combination of value, safety, and timing are all sorted all the way down. So how cool is that? So let's go back to our mantra. We want you in safe, undervalued stocks that are rising in price in a rising market. So let's start off with GLUU, GLUU. The stock is currently trading at a price of $9.72. Now, when we say, we also want you to know what your stock is worth, how safe it is, and if it's got a buy, hold, or sell recommendation. Well, in order to see what the stock is worth, it's got to be compared to a value. We assign a value on every stock every day. That is intrinsic value of what we feel that stock is currently worth. It is not a target price. It's what we feel the stock is worth, and somebody put that, and what it's worth, and it gives me a feel of no target price, but is the stock over or undervalued? Now, most of you, before I go to the chat, most of you will use PE. If you've already been in the market for a while, you'll use PE. The problem with PE is that it's subjective. I could put 20 people in the room, give them different PE numbers, or give them one PE number, and I'll get different explanations of whether or not they feel it's under or overvalued. There is no unification on PE. It says if a PE is this level, it's under or overvalued. So we take that out of the equation. We assign a value for a stock. It is an intrinsic value of what we feel the stock is worth based on earnings and earnings growth, amongst other things, to give an intrinsic value on a stock. So GLUU is trading at $9.73. It's got a value of $8.04. Readable best data. Thank you for that. LIFA gave me that YZA.IR. Keep in mind, I'm only in the US database right now. In order for me to pick up that stock, it's in a different database. I would need to have that database open. So everything that I'm showing you right now, you can move that over, Joey. Everything that I'm showing you right now, 2 more. Everything I'm showing you right now can be used in any marketplace, any one of the markets that we track. But that's where we stand right now. Let me put in those other 2 stocks. 2 more stocks came in. TQQQ, Gush, GUSH. Notice that as I hit the enter, it's going to automatically tie them in to where they fit by way of VST as well. All right, notice that GLUU is still on the top. Let's continue analyzing that stock. Stock is a little bit overvalued. When a stock's price and value are within 10% of each other, the stock is considered to be fairly valued. Now, the next indicator, RV, that looks at the stock's long-term price appreciation potential. All right. Wow, really? Thank you for that. Asks, let me know that he subscribed. They subscribed. Excellent. I appreciate that. That's awesome. Being that, you get to see the data, at least try it out, test drive it, folks. Next indicator, RV, the stock's upside potential compared to a AAA corporate bond. Remember, these are all cast on a scale between 0 and 2. Above 1 is favorable, Below 1 is unfavorable. RV at 1.46 tells me that over the next 1 to 3 years, glue should outperform that AAA corporate bond by 46%. This is a stock that I would want to hold long term. Relative safety, the indicator of risk, the consistency and predictability of a company's financial performance. Below the value of 1, this tells me when glue comes out, when earnings for glue comes out, it may or may not meet or exceed earnings. All right? So I can use that as a ticker, as a way of saying chances are that the stock will or will not exceed earnings expectations. RT tells me if the stock is in an uptrend or not. RT above 1, stock's in an uptrend. The higher above 1 it is, the faster in an uptrend it is. The more below 1 it is, the faster in a downtrend it is. So I can look at this stock, say that it's got good upside potential. It's moving fast now. When earnings come out, though, it may or may not meet or exceed earnings, and the stock is a buy recommendation. So very quickly, meet. Let's do this real quick. 5.49, value 3.18. And when that happens, the stock is overvalued. Now, buying a stock that's overvalued, is that a bad thing? Chat in the room. Is that a bad thing to buy a stock that's overvalued? And while you're chatting, I'm going to answer the question. No, it's not a bad thing. It just means that people are willing to pay a premium. They're willing to pay more than what the stock is worth. And if enough people are willing to do that, it will drive the stock's price higher. But in its way of knowing if it's over or undervalued, I can see that it's overvalued, but it's not altogether a bad thing. Let's look at the next thing, relative value. This stock it probably will not outperform a AAA corporate bond over the next 1 to 3 years. So long term, I may not want to hold on to that stock. All right? Relative safety above the value of 1. The stock stands a good chance to meet or exceed earnings expectations, which will help the stock's price go higher. But the big thing, the stock is above the value of 1 as far as relative timing. The stock is definitely in an uptrend. You know what this tells me? That this is more of a technical play because the fundamentals of the stock, which are the RV and the RS, may not be nearly as good as other stocks, but it is definitely moving up in price. Let's go to the bottom of the list. GE, $9.13, value $5.59, overvalued. All right, not altogether a bad thing. Let's look at the indicators though. Relative value. The stock does not have a good chance of outperforming a AAA corporate bond over the next 1 to 3 years. Probably not a stock I want to hold long term. Relative safety, below the value of 1. Probably not a stock that I want to hold through earnings because chances are it may not meet or exceed earnings. Relative timing, below the value of 1. The stock is in a downtrend. Moving over, the stock has got a hold recommendation and it's got the lowest VST on the list. This is how you analyze the stocks that you have. And I can go through each and every stock. I can show you, even though Apple has got good fundamentals, look at that. Relative value above the value of 1, this stock should outperform a AAA corporate bond by 46% over the next 1 to 3 years. Relative safety above 1. When earnings comes out, most likely Apple is going to meet or exceed earnings. What's hurting it right now? RT is below the value of 1. The stock is currently in a downtrend, and the stock is a sell recommendation. All right, let's go add one more stock. I'm going to put on PCG. One more stock, PCG. Hit enter, and there we go. That should end up towards the bottom as well. Analyze it. The stock is $7.12 value, so it's greatly undervalued. It's got good upside potential, but it's not a safe stock, and holy smokes, it's getting killed, moving down lower and lower and lower. And I'll have another presentation not too long from now talking about how we called where this was a great opportunity to short. Right now, the stock is currently a sell recommendation. Look out for a short presentation on that stock not too long from now. So these are the stocks that we looked at. These are the stocks that we've built into a watch list. So I'm going to show you something. Let me show you again the power behind the software. Let's say that as a group, these are the stocks that we own. All right, as a group, these are the stocks that we own. Before I do that, though, let me do something else. Let me look at one of the ETFs. Why? Because it's going to be a little different than the other stocks. ETFs are exchange-traded funds, okay? How about TQQQ? The price and the value will always be the same. It's hard to put a value on an index or on a group of stocks, which ETFs cover. Okay, you'll notice that the RV and the RS will always be at 1 for the same reason. It's hard to put a relative value and a relative safety on a group of stocks or on an index. But when I'm looking at an ETF, what I am looking specifically is at RT. Is the ETF in an uptrend or downtrend? The higher above 1 it is, the faster in an uptrend it is. The more below 1 it is, the faster in a downtrend it is. So when I'm looking at ETFs like TQQQ, like gold, look at the RT on gold, still above the value of 1, but not nearly moving up as fast as TQQQ. Let's look at Gush. Oh man, Gush is getting beat. How about being able to see that the relative timing on Gush is not that good? I shouldn't be in that as an ETF right now. SQQQ, below the value of 1. The RT is going to be key in telling you whether it's okay or not okay to be in an ETF at any given time. So I wanted to show that as well. As you wanted to look at ETFs, they will not give you a value and you will not get changes in RV and RS. They're going to always be defaulted to 1. So the one who asked me about the ETFs, hopefully that makes sense to you right now. Did you see that, Joey? Mm-hmm. All right, are we still good to go? Mm-hmm. Excellent. All right, so as we continue to go, all of the stocks that you put in here are all sorted by our master indicator VST. So now I'm going to take this back a little bit more. If we were a group of people who own these stocks, I'm going to show you how to weed your garden. All right, so watch this. Sort this list now by RT. Remember, that's the indicator that tells you if a stock is in an uptrend or not, right? That is the most important indicator. Excuse me. That is the most important indicator. If I own a stock and RT is above 1, the stock is doing exactly what I want it to do. Remember, what are we looking for? Safe, undervalued stocks. Let's go find one. Safe. Let's go to, not that one. What do I want to look at? I'm going to see if I can find one. Here we go. Safe, undervalued stocks, 35 to 56, that are rising in price, RT above 1 in a rising market. So I can go through this list and specifically choose the stocks that I should be in based upon our mantra, buying safe, undervalued stocks rising in price in a rising market. All right, Micron would fit that bill. Is there another stock that fits that bill? Disney, undervalued, safe, and rising in price. Disney is another one. Safe, relative safety, safe, undervalued, 110 to 137. Undervalued stocks rising in price, RT above 1, not by a lot, but still in an uptrend in a rising market. So I can go through this list of stocks and make a decision. I removed the weeds choking the portfolio. I know, so let's talk about that. By removing the weeds, I'm finding the stocks that have an RT below the value of 1. I'm going to highlight all of those. These are the stocks with RTs below 1. These are the stocks in your portfolio that are not going up. All right? All of these RTs are below the value of 1, and I'm ticking real time. I'm ticking. That's why these colors are changing. I'm ticking real time. All of these stocks have RTs below the value of 1. These are the stocks that are hurting your portfolio. If you're not a subscriber to the software, this is one thing that I'm going to tell you to do. Once you become a subscriber, and I'm going to say it that way, once you become a subscriber, make sure you take your stocks and you put them into a VectorVest watch list. From this, we're going to start saving you money right away because you're going to find the stocks that are hurting your portfolio, and those are the stocks that you need to weed out of your garden. So even though I might like these stocks, I love Apple. I love that Apple is undervalued. The fundamentals, the relative value and relative safety are good. They're above the value of 1. But RT is below the value of 1. So you know what that means? This is a good stock, but not the right time to buy it. Does that make sense? This is a good stock, but not the right time to buy it. So you know something? Take it out of your portfolio and wait for a better buying opportunity. You're looking at oil. How about that RT is below the value of 1? It's moving down. It's hurting your portfolio. How about the SQQQ? Moving down, hurting your portfolio. And of course, PCG is way as far as it can go to the bottom without being at 0 yet as far as price, but way down. And these are the things that you need to get out of your portfolio. So let's say you do get out of these stocks. Where do you go to replace stocks to heal a broken portfolio? Well, I'm glad you asked me that question. Even though it wasn't in chat, I'm glad you asked me that question. I'm going to tell you, first place to start off, go to our stock viewer. From our stock viewer, you're going to be looking at the over 8,000 stocks that we track, 8,086 stocks that we track right now. What you're looking at from the stock viewer are all of the stocks in our database sorted by our master indicator VST. These are the types of stocks that you want to replace to heal your broken portfolio. Remember, these are sorted by our master indicator VST, sorted all the way down. This is the kind of stock that you want to replace. Most of these stocks are going to be undervalued, mainly to the point of being safe, going up in price. ATUT, that's a little overvalued. Here's another one, SMTX. Undervalued, the safety is not quite where I want it to be, but it is rising in price. Glue, we already talked about that. Let's talk about 26. How about Kirkland? Undervalued. Safe, it's above the value of one, so it's favorable, rising in price. So I can look at any stock and make sure that they fit our mantra of safe, undervalued stocks rising in price in a rising market. All right? A lot of these stocks are overvalued. Does that make it bad? No, it does not. There's a lot of stocks in the market right now because of interest rates. Not a lot of people putting money in the bank. They're putting them in the market because interest rates are still at historic lows. So there's a lot of money in the market driving prices of stocks higher. And sometimes it will raise it higher than the value, but that's why I say it doesn't make it a bad stock, especially if a stock is overvalued, but it's got a relative value above one. These are what we call glamour stocks. These are stocks that have great upside potential that right now are just overvalued. All right, so that's how you heal a broken portfolio, by making sure you go into your watch list, build your watch list. Do me a favor. Let's go back to this other screen. I'm going to use my words. Go back to the slides. Because even though I talked to you about the watch list, there you go. It provides the fastest, easiest way to learn VectorVest. Okay? Takes the guesswork out of managing your portfolio. I walked you through what you look for in your watch list. It saves hours and hours of valuable time. Folks, what I just showed you will not only save you time, but save you money in your portfolios right away. As soon as you subscribe, this software is going to start saving you money as soon as you subscribe and put your stocks into a watch list. There you go. All right. So building that watch list of stocks is part of keeping it simple. Let's go to the next slide real quick. Keeping it simple, manage your portfolio by selling low VST stocks. In this case, I got you to sell out of low RT stocks. But if I sort it by VST, let's go back to my 7 Secrets YouTube. If I sort this by VST once again, all right, I can then turn around and sell the stocks that have the lowest VST. All right? Same scenario, pretty much, and it's going to pretty much be right in line with the stocks that have RTs below 1 as well. Pretty much. All right? So, there we go. And buy high VST stocks that are going up in price. I showed you how to go to the stock viewer to find the high VST stocks going up in price. Now, let's get on to the second secret. Everybody, did you like the first secret? All right, remember, we're keeping it simple. Does that make sense about how to keep it simple? All right, now we're going up to, dang it, read the graphs. Which way am I supposed to go? Anyway, there it is. Secret number 2, read the graphs. Did anybody have any comments about the keep it simple part of it? Simply build your watch list, look at your stocks to help you to make a decision on the stocks that you need to get rid of to heal your portfolio. That healing the portfolio part, folks, is going to make a big difference in your ability to make money or not. All right? So now we're going to get into reading the graphs. Let's go back to the slides real quick. In learning to read the graphs, here we go. There we go. In learning to read the graphs, what are you going to do? The graph is, what we like to say, a picture is worth 1,000 words. All right? Graphs don't lie. If you're looking at a graph and you're trying to make a decision on what you want to do with the stock, you need to move on from that graph. You are not going to be able to will that graph into what you want to do. And we always try to do that. Well, it sort of looks bad, but it looks... No. Graphs don't lie, and graphs are going to give you the actual factual data of what's going on. Looking at the price movement of the stock is going to help you to make sure that you're buying into the right stock at the right time. You want to buy into stocks that are rising. The graph is the DNA behind the stock. What you see is what you get. And sometimes it is a story that you don't want to hear. You're in a stock and you say, man, I really like that stock, but the stock says no. Thank you very much, Clay. I appreciate that. And thank you for that, Daniel, as well. All right. All I'm saying is don't put yourself in a situation where you look at the graph and you try to talk yourself into the stock. Don't do it, especially if you own it. If the graph doesn't look good, you might want to consider selling it. Stop talking yourself into that stuff. Go back to that. There we go. And what you want to do when you're looking at a stock is you want to favor smooth patterns moving from the bottom left to the upper right. All right? That's what you want to do. So now, what do I want to do? I'm making sure. Nope, so good. Now I'm going to stay right where we are. And I'm going to now go back to, what am I looking at? Oh, nope, that's not what I want. I want the graphs. How do I put these into the graphs, Joey?
You have to take this.
Okay, so I'm going to move that over. I'm going to bring up my graph. I'm going to build graphs of the stocks that we built into our watch list. Oops, there it is. All right, I'm going to build these stocks into the watch list. All right, so sit there and just watch me work. Watch me work, baby. All right, let's go to GLUU, MEET, DIS, MU. Now that we've looked at these stocks and analyzed the stocks, before you buy any stock, always take a look at the graph. AAPL, TQQQ, GLD, WMT, Ford, PCG, Gush, SQQQ, man, look how quickly I could build that list. So now, what did I say we needed to look for? Let me move this back over. All right, and then minimize? Nope, just leave it? Yep. Oh, okay, so let me do this. Yeah. Remember I told you what we look for in a graph? What did we say? We want to favor smooth price patterns rising from the lower left to the upper right. How about that as a graph? Do you like that as a graph? Yes or no? Come on, folks, chat it up. Chat it up. This is some good stuff right here. Is that a good-looking graph? Is that a stock that you would go out to buy if the market's conditions were conducive to the stock moving higher? Yes or no? Come on. This ain't no time to be shy. Don't be my backseat Baptist. Move up to the front pew and come talk to me. All right? Even if you don't want to chat it in, I'm going to tell you, yes, that's exactly what we're looking for. We're looking for stocks that move from the bottom left to the top right. And this graph has some specific things on it. We have an indicator on here known as the stop price. The stop price is your line in the sand to get out of the stock. Men lie, women lie, but graphs don't lie. There you go, Daniel. That's right. What you're looking for here in that stop price. Stop price is a 13-week moving average adjusted for the fundamentals of the stock. What are the fundamentals? Relative value and relative safety are the fundamentals of the stock. So you can't just take a 13-week moving average, put it on a stock, and call it a VectorVest stop criteria. It is your line in the sand. When the stock's price falls below the stop price, like it did here, okay, the stock automatically gets a sell recommendation. I will do a presentation where I talk about how a stock gets a buy, hold, or sell recommendation. But for this presentation right here, as soon as the stock's price falls below that stop price, the stock automatically gets a sell recommendation. When it goes back above, it will get a hold. And in order to get a buy, other things need to happen for the stock to get a buy. But that is your line in the sand. Once a stock's price falls below that stop value, that should be a good time for you to consider getting out of the stock. RT, remember that's the indicator that tells you if a stock is in an uptrend or not. How about when the stock's price fell below the stop price, RT fell below the value of 1. The stock was also in a downtrend. Now earnings, which is the engine that drives the stock's price higher, was still rising. Even though the stock's price fell, Earnings is the engine that drives the stock's price higher. What happened to the stock's price? It rose higher. That is the definite correlation behind rising earnings and eventually rising price. But at some point in time, even though the earnings look good, there is a bad time to be in a good stock. You need to be able to determine that, and the graphs will help you do that. Right now, what's the stock doing? Running up higher, hitting a new high. RT is really running. Earnings are starting to turn over a little bit, but still definitely moving higher over the last year. Let's go to the next graph. Next one here, meat. Moving from the bottom left but the top to the top right, but a lot more volatility. This is what we say. What you see is what you get. This stock may look good now, but if you're looking forward, if you can't deal with these pullbacks, what you see now is probably what's going to happen in the future as well. You probably are not looking at getting into this stock. Unless you're just saying, man, the stock's moving up, I'm going to jump all over it. Okay. RT is above 1, starting to fall and pull back a little bit. Stock's price starting to pull back a little bit. See that correlation between the stock's RT and the stock's price? Man, this stuff is right on point. Right on point. Next one, Disney. Still pretty flat over the year, but a lot of volatility up and down, up and down, up and down, along with RT as well. The one thing I do like about it, though, the earnings per share on Disney is still growing. So for the long haul, I think that Disney still has the wherewithal to keep rising, but I wait for the right times to be in it and get out of it at the wrong times. Why not make money when you can? Take your profits, wait for a better opportunity, make money when you can, take your profits, play it to the downside or wait, make money while you can. Do that over and over. Having this kind of analysis is going to help you to capitalize on the money-making opportunities when they're right and get out of the stock on the times when the stock is going down in price. Folks, you can't get any simpler than this. Even though this is the reading the graphs, this is why the graphs are so important. Go to the next stock, MU. Looked good at the beginning of the year and then fell hard. Fell hard. Earnings just, earnings started to fall. Big bash or big fall in earnings. Something came across. A big bash in the earnings. And man, is the stock getting ready to turn around now? It's no longer a sell recommendation right now, but man, this stock has gotten beaten up big time. How do you deal with IPOs that won't have a market history? Good question. So when an IPO comes out, it won't have the market history. I'm always going to be of the mindset, wait. Now, what's going to initially happen on an IPO? It's going to jump up. Why? Because it's news driven. But you'll notice that a lot of stocks in our database, when the IPO comes up, the stock will run. It won't have favorable fundamentals. It takes time for that to happen. All right, Daniel says, what is the blue line? That is the stop price of the stock. Remember, that's the 13-week moving average of the stock's price adjusted for the fundamentals of the stock. That is what the blue line is. So going back to Justin's question, in regards to the IPOs, a lot of times IPOs are going to look unfavorable in the VectorVest software because it doesn't have a significant enough amount of data to give it a real. And most times when the IPO first start, it ain't making money. It's being driven by news. It's being driven by the anticipation that the stock is going to go up. But every time you see an IPO, for the most part, not every time, most times you see the IPO after the stock IPO, it pulls back. Does that make sense? But VectorVest will give you the actual factual data based upon that. So IPOs are news driven. VectorVest is giving you the data behind it. Hold on. That's my VectorVest cup with VectorVest water. That's super water. Woo! That's some good water right there. All right. So let's go look at a couple more stocks. Let's go. That one is not looking favorable from the bottom left to the top right. A lot of volatility. So again, when you look at a stock, you say, man, I like me some JP Morgan. But when I look at the graphs don't lie. Do you like that? Do you like sitting through all of that? And if you don't, then that's not a stock for you. But the stock is moving up now. Am I going to deter you from buying it? No. But if you look at the graph and you know that this happens, what do you think is going to happen going forward? The stock is going to continue to do the same thing. Can you stomach the move? If you cannot, move on to the next graph. That's much better. Here's the WWE. Let's get ready to rumble. And there you go. Look at it run. And then when October high hit and the volatility in the market hit, This stock was not safe from that. It got hit through that volatility. But what is it doing now? It's starting to rebound and start moving up. It is now a buy recommendation. RT is above the value of 1 and rising. Earnings per share is rising. You now get an opportunity. How about we got higher lows? Higher lows as the stock is coming up. Thank you. All right, that's what you're looking for, and you're looking for the right opportunity. And this graph is telling you. I'm going to show you something. I'm going to draw a freehand line. Look at that. That's a trend line on the stock. And as long as the stock's price can stay above that trend line, that's what you're looking for. Could this be a good opportunity? As long as that trend line is intact, whoo, that's a good play. Stock's price is definitely moving up. Is that a 13 or is it simple or exponential? It is a simple moving average, but again, it is adjusted for the fundamentals of the stock. It's a 13-week simple moving average, but the other thing that you cannot add into that stop price is looking at the fundamentals of the stock. All right, let's go look at another couple of stocks. I like that WWE now is that it's running. After it got hit, look at that, nicely running higher. Graphs do a great job. Woo! Goldman Sachs, don't look so good. What is it doing now? It's starting to run now, coming off of a bottom. The stock moved from a sell to a hold, currently now to a buy. It's got the recommendation of a buy because it did all of the right things to get a buy. Look at that nice move on RT. Look at the earnings per share. They make money. But even through here, even though they make money, this is a bad time to be in a good stock. That's what these graphs are all about. Couple of more. What else is here? Apple, beautiful looking graph towards the beginning of the year. Again, got affected by the volatility in the market after the October high. What is it doing now? A lot of these stocks are giving you great insight as to thinking about getting into them now. What would I be looking for Apple? I need that RT to go above 1. That's my confirmation that the stock is currently in an uptrend. It's moving up nicely from the bottom. If I'm a little bit more aggressive, I'm in it. I got you. All right? But if I'm a little bit more tentative and I want more confirmation, why not wait for RT to go above 1? Well, Glenn, you can leave a lot of money on the table. Would you rather leave the money on the table or jump in now and start losing money? Possibly it's there. RT gives you more confirmation that the stock's in an uptrend. A lot of times, if you're jumping in now, you say, I like what it looks like now. As a technician, you might use moving averages to jump in and use that. Nothing wrong with that. Nothing wrong with that. But if you're still looking for real confirmation to get in, I would wait till RT goes above 1. I bought that from my son. He loves WWE. That WWE stock looks good right now. All right, let's go. Whoops, what did you do, Joey? Stop doing that. All right, one more stock. TQQQ. Look at it run. This is a triple leveraged or a leveraged, I think it's triple leveraged, on the Qs, on the NASDAQ. As the NASDAQ has been starting to run, this ETF has been running. Look at it. Now above that value of the stop, it is now at least a hold. Look at that run. Earnings per share won't be on ETFs, but I'm looking at relative timing. When RT is above 1, it's a good time to be in these ETFs. It does a good job. One more time, I got 7 minutes. All right, Goldman Sachs fell, now starting to rise. Notice that it never got a sell all year. That's the difference between a 13-week moving average that you can put on a stock and a 13-week moving average that's adjusted for the fundamentals. Even though this stock fell as hard as it did, the fundamentals were still in place so that the stock never fell below its stop price. So then, does that make sense? That's why you can't just take a 13-week moving average and put it on a stock and call it a stop price. That's not how it works. Real quick, let's go through some of the other graphs that are available. I minimize it. Doesn't matter. I go back. Oh, I could have stayed there. I'm going to get to pick that up. All right. Some of the other graphs that are available, I'm going to click on Add New. Click on Stock. We have an industry or sector graph. How many people are interested in marijuana stocks? I'm not going to ask that. I'm going to scroll down and let's go look what that industry looks like by way of a graph. I'm going to go down to healthcare marijuana. How cool is that? And look at the marijuana graph. How about looking at that industry? I can see that back in August, that industry was on a tear. Holy smokes. Then it fell hard. And now it looks like it's on a tear again, but now moving sideways. How cool is that? How strong and how powerful is a graph to be able to look at an industry, any industry you want. I'm going to click on Add New. What else can we do? We can look at a sector graph, market timing graph. We can look at a market climate graph. The market climate graph is a 30,000-foot view of the market. A performance graph will compare a stock to a stock to an industry to an industry, a stock to an indice. Anything I want, and I can make a watch list graph of any watch list that I own. All right, so man, oh man, one last thing. Let's look at the market timing graph. Remember what we said? We want to look at safe, undervalued stocks rising in price in a rising market. Our market timing graph is where you're going to time the market. Coming off of the low here, look at what the market's doing. Market's going up. So now go look at your list of stocks. Are they safe stocks, relative safety above 1? Are they undervalued? Are they rising in price? Is RT above the value of 1? And are we in a rising market? Holy smokes, folks, you're going to put yourself in a heck of a situation if you follow those things. And all I did right now is comprise, keeping it simple, along with reading the graphs. Those two secrets in and of themselves are going to put you in a much better position to consistently make money in the market. Joey, can you put me on the main screen? There you go. All right. So hopefully, folks, the first two secrets for making money, oh, there we go. Keeping it simple and reading the graphs. That's what we just did. Dang it. Oh, whatever. You can read it. To keep it simple and reading the graphs, hopefully that makes a little sense to you and hopefully takes and demystifies the market. For anybody in here who's new and you think that the market is a hard thing to do, these 7 secrets are going to put things into perspective for you. For anybody who's a veteran, seasoned investor, I'm going to say that these 7 secrets will hone in on what you're currently doing and help simplify the process. If you can simplify the process, it's easier to use. If it's easier to use, the more profitable you'll be. The more profitable you'll be, the more confidence you will have. And it all stems around confidence. You're only going to use stuff that you're comfortable using. These 7 secrets are going to put into your hands a sense of being more confidence, a sense of confidence that you probably haven't had before. That in and of itself is well worth it as well. All right, so from here, folks, I do want you to hit the subscribe button, sign up for a trial. It's a simple trial, 30 days for $9.95. I even saved you a nickel. It's normally $10. It's really $9.95. But $9.95 for 30 days. Try it. If you like it, you keep it. If you don't keep it. There's no contract that we lock you into. We do not sign you up for 50, 11,000 years. It's not how it works. If you don't like it, you cancel. I'm going to let the software sell itself. I ain't got to sell it. I really don't. All right, if you like what you saw, take advantage of it. Test drive the software. And that way, now when you go and do this, the next session for the second 2 secrets, which is going to be heed the color guard and exploit the homepage, man, you're going to be able to jump on board. But I bet you again, if you take the trial and you make that watch list of stocks, you're going to start saving yourself money right away. All right, and that's it in a nutshell, folks. Save yourself some money. Take advantage of the trial. Real quick, part 2 will be next week, and then we'll have part 3 the following week. If you like what you saw, like our YouTube, follow our YouTube, subscribe. That's big. All right, we need you to subscribe. We want to grow this. We want to grow this just like I'm doing on a different live stream. It's doing well. People like what they see. And if you like what you see, subscribe. Don't forget to tap the bell. The bell is going to give you the opportunity to make sure that you are getting the alerts on when our upcoming presentations will be. And they're going to start doing this on 2 p.m. starting next week. All right? If anybody have any questions? I've done a lot of talking. You guys have chatted, and I appreciate the chat. Anybody have any questions? All right, this is an opportunity. That's another beautiful thing about doing these live. You get your questions answered. You get your questions answered on the spot. hot on the spot, Johnny on the spot. You get your questions answered right on the spot. Joey, can you pull that over to me just so I can see in case anything pops up? Not that one. Nothing? All right. Well, I appreciate. I know, I tried. Thank you. So all of the stocks that you gave me, I had an opportunity to look at for the most part. Anything else that I can do for you going forward, by all means, the next time we get together, chat with me, get your questions answered. I want to see the amount of people watching grow. So get other people to like this as well. Sign up for whatever we need to do. Let's grow this. Let's grow this YouTube community. This is only our first time doing it. Let's grow it. That's only going to happen from you guys. Get other people involved, whatever it takes. I'm sure there's a lot of financial stuff on YouTube. We're different. We're different in that, one, I'm going to have a little fun with you because I'm going to relax your mind so that when you do that, you're going to, inadvertently, you're going to learn more. Inadvertently, you're going to learn more. I'm going to interact with you, and I'm not going to be afraid of any question you put up there. All right, a lot of people will do that, and, well, I don't want to answer that question. Well, unless you're being like really jerky about a question, I ain't going to answer it. But as long as it's a good question, I like Justin's question about how we deal with IPOs. That's a good question. And you know something? I'm going to always be here to answer any questions that you have. And if I don't have an answer, I'll get you an answer. I'm not going to ever blow smoke where it doesn't belong. But I want to grow this YouTube community, and you guys are going to help me do it. And I got faith in you that you will. And with that, I got no more questions coming up. So with that, I'm going to sign off saying adios, arrivederci, ciao, au revoir, sayonara. Hi, everybody. Did you like that presentation? Well, right now, we've got other videos for you as well. Click here and click here. Better yet, click them both. Thank you for being as part of these presentations. Take advantage of the information that's there for you. Have a great day.